Good afternoon, everyone, and welcome to another video cast from Terril and Company in St. Louis, Missouri, Private Wealth Managers. Today is Sunday afternoon, June 12th, and helping me as always with the video cast on the camera is our IT genius, Mr. Jesse Baker.
Good afternoon, everyone, and welcome to our latest video.
Jesse, we got a lot to cover and a lot to say today. I'm liable to be a little bit long-winded, so we better get started.
Sounds great.
The market for investments is continually going down because the Federal Reserve Bank of the United States is destroying the value of the US dollar and they're destroying worldwide confidence. No one wants to hold a US dollar. If they make zero interest on it, it's worthless to them. In addition to it, if you have someone due to quantitative easing 1 and quantitative easing 2 that's printing billions more to buy US Treasury bonds, that we didn't have the money, so we had to sell US Treasury bonds, but then a different branch of the government supposedly has got the money to buy those Treasury bonds? No. It's money creation in its worst form. And everyone all over the world sees this, knows this, and therefore they're looking for alternatives to holding a US dollar. One of the best alternatives is to buy a tangible asset, and that is exactly what investors around the world are doing, including major institutions. They're buying gold, they're buying soybeans, they're buying corn, they're buying cotton, they're buying steel, any type, oil obviously, they're buying any type of commodity. If you question, well, that may not seem right, let me throw a question back and say, why is it with oil in a glut situation and storage tanks all over the world filled to the brim with oil, why are prices $100 a barrel? And the answer to my own question is because it's not for sale. Much of that oil is being held as a store of value for people's accumulated net wealth. They would rather hold their wealth in oil. They know that's a rare commodity that is difficult to come up with. Therefore, it can't easily be duplicated. Why would someone want to hold their money in a US dollar when you make no interest of any kind on it, and it's very easy to pick up the balance sheet of the Federal Reserve Bank and see that they have created another 200 or 300 billion new dollars that no one worked for and no one had any productivity behind. This is your problem. Jesse, let me ask you this question. If you had $10 million and you hired me to manage it for you, if you realized that you cannot make any interest on them, even if we put it in a U.S. government bond, you might make an 1/8 to 1% and then have to pay income taxes on it, are you going to get excited about that with your $10 million?
Joe, if I had $10 million, I probably wouldn't be in here on a Sunday afternoon, especially one as beautiful as today, shooting a video. Well,
just for the sake of our economic discussion, I'm going to suppose that you do have $10 million. Anyone around the world, and my point of doing this is simply to illustrate the fact that if I said to Jesse, why don't we take $1 million and buy crude oil? Why don't we take $1 million and buy soybeans? Let's take $1 million and buy steel. These are things that are always valuable and always have value. What is wrong with doing that? Isn't that a much better investment than keeping it in the form of a US dollar that makes no interest of any kind, and you've got a open policy of printing more and more and more of those dollars and destroying the value of it. This is the problem. The result of the problem is food prices at the grocery store that people can no longer afford, energy prices that are scaring people. The $4 a gallon gasoline has backed off a little bit here in the St. Louis area to $3.70. But people are not sure. Maybe it's going to go to $5 a gallon. It's the fact that it hit that magic $4 a gallon once again. It is not necessary to keep this policy. You're creating a problem. Businesses have no idea what their raw material costs are going to be. They have no idea what it's going to cost them to operate. Therefore, they are not going to go out and hire anybody. If anything, they're going to be inclined to lay more people off. Your policy is creating unemployment. Your problem you have with this money creation and your 0% interest rate, you're the problem, Mr. Bernanke. You and the Federal Reserve are going to make matters even worse if you do not stop the insanity of this incredibly loose, reckless monetary policy that you have. Now, Jesse, let's talk about what could be a quick solution and how they could solve this, because if they don't solve it, at Terril and Company, we remain very negative on investments. Any hint or indication that they may solve the problem, we turn bullish again. It's that simple. So let's turn our attention now and talk about how they can solve the problem. Let me offer this solution to the problem that you're facing and the dilemma, the corner that you've painted yourself into, so to speak. You're holding short-term interest rates at 0, and longer-term interest rates are 10-year government bond anywhere between 2.9 and 3% at the moment. You call a press conference for everyone in the world to see, stand up nice, tall, and straight, and in your most confident voice, assure everyone that you're not going to let the value of the U.S. dollar go any lower, that you're going to be raising short-term interest rates to 2 to 3%, and your expectation and hopes are that the longer-term interest rates would maybe go to 5 or 6%. Your belief that the economy will be able to handle this, let me stop and throw a note in that if you think the economy has to have 0% interest rates and cannot handle 2 or 3% short-term interest rates, you've got a paper economy that isn't worth anything anyway. But the 2 or 3% short-term interest rates, and you standing there assuring everyone you're not going to let the dollar go down, and you're going to stop the printing, no more quantitative easings of any kind, and you're going to be very, very careful about the Federal Reserve Bank's balance sheet, you'll restore confidence all over the world. You would see people decide, now I can sell my oil because I'm not afraid to hold a dollar. I can sell my gold. I can sell my soybeans. I can sell my corn. You would see prices come down because people will go back with the U.S. dollar, the world's reserve currency. They would go back to being willing to hold the dollar for a storage of their accumulated net wealth. If not, they're going to continue to hold some other form of asset. But if you bring the price of oil down, which you would immediately, $20, $25 a barrel, you bring the price of food down, you get back to a situation where the consumer can afford to pay for their expenses. You bring that 8 to 10% rate of inflation that we're experiencing right now, real rate of inflation, not some silly theoretical rate of inflation that you have. I'm talking about cash money that it costs people to operate with, what it costs them when they go into the grocery store. If I go into the grocery store to buy groceries, you know what? Behind the counter, this is what they want. They want cash. They don't want me to tell them, theoretically, my prices are all down because people are more productive now, or that my homeowner's equivalency rent is down, or that labor costs are down. We're talking here about what it costs people to live. Your policies are making it impossible for people to afford to live. Point blank, period. You must raise the rates. You must assure everyone that they can afford to hold their net wealth in a US dollar because it's safe. They'll sell oil, they'll sell cotton, they'll sell these commodities. You can get prices down to where the consumer can go back to a more liquid situation, be able to perhaps make house payments on mortgages, perhaps be able to buy a new car, perhaps be able to make a trip, buy some new clothes. If you don't, then the consumer is going to spend all their money on food and energy, and there'll be nothing else for anything else. Let's throw in the fact that a big part of the spending power of our economy is senior citizens. It would not hurt the confidence of senior citizens to be able to make a little bit of money on their CDs, on their retirement money. Right now, you're not allowing them to make a penny. That's not conducive to them being willing to spend money. It scares them. They're retired and they're making nothing off their investments. If they know they could at least make 2 or 3%, or maybe they could make 5% on a longer term issue, they may be a little more willing to spend a few dollars. They might accidentally go out and buy a new car. Let's talk about businesses. If businesses believe you when you stand there and tell them what you're going to do, and they know prices are going to be stable, they're much more likely to decide to have a little growth and expansion. Perhaps they will build a new plant, buy new equipment, if they know for a fact what prices are going to be. They might even accidentally hire someone and see unemployment come down. Doing it your way is causing unemployment to go up. If you don't believe this, step back. Take a look at what's happened in the last 2 years. You've had a zero interest rate policy for 2 years now, and unemployment's gone higher, not lower. Do you need someone to hit you upside the head with a frying pan for you to be able to see this? Raise interest rates. And while you raise interest rates, assure everyone that you're doing it in order to restore the integrity of a dollar, and that you are going to create a situation where it's safe for people all over the world, institutions, banks, and individuals, to hold U.S. dollars. They do not need to sell them and go buy tangible assets. You solved the problem right there. Let's see, Mr. Bernanke, if you've got the common sense to take this policy. Thank you for joining us today. And we, as always, like to point out, we don't like being bearish. It's a much nicer environment when we're bullish and prices are going up and the economy's doing well and we're making money. But on the other hand, it is what it is. The Federal Reserve Bank of the United States is destroying worldwide confidence in the economy, in the investments, and in the U.S. dollar. And if they don't stop, we have to continue to remain being very negative. And we will update certainly any hint that the Fed may change their attitude, or that it may finally dawn on them that this is a terrible policy. We'll be back with a new video update immediately. Thank you for joining us today. This has been Joe Terril at Terril & Company, Private Wealth Managers from St. Louis, Missouri.